Hey, it's Obi Chukwumah, Space and Equity. We're all about increasing assets and creating new space. Real bankers for real people. We're going to drop a ton of gems today. So you ain't getting all this for free. You're going to get parts of it. But if you want the whole package, you got to join our Patreon page.
Bam.
So you can follow us at Obi_empowers. Check us out on YouTube. Come Correct Podcast. Space and Equity. Type in Space and Equity. You're going to come up. Like and subscribe. This is real data to get you the money you deserve. We're here today with SMMXEPERTS himself, King David Reeves. We're going to go deep dive into a commercial loan process, how we got $2 million to a business owner, all the steps that it takes to get there. And so, like I said, you guys are going to get it in bites. You ain't if you haven't exercised for the 800 meter, you can't jump out there and run that 800. You're going to get your tail sucked up after about 300 meters. So we're just going to give you some bites. And then when you're ready for the 800, you can come join us for the 800. But for right now, what I wanted to share is that there's really nobody navigates the commercial loan process by themselves. The reason it's a relationship-driven agenda is that the entrepreneur is focused on their entrepreneurial feats, David, right?
The day-to-day.
The day-to-day. You're running your business. Do you have time to know everything a banker knows about the transaction?
Not at all. Not even close.
So those who go at it themselves run into a lot of roadblocks, or they built a relationship with the banker and say, this is what I want to do. He knows, she knows their process, their operations, and she advocates on their behalf. So I'm going to walk you through what that looks like. So I sent you an email yesterday, 11:48.
This is what the people want.
This is what the people want.
Yeah,
so,
I opened that email and I was like,
woo.
Yeah, ain't no way I'm not paying for somebody to guide me through this.
Okay. So let's what we're going to do is you're going to tell the people, you say the need, you talk about the need and I'll explain it. And then we'll just go on to the next step.
Okay. So right now, the need, the example we're using is how you buy a building and convert it to a birth center. Okay. So there is a gentleman, he still exists today. So I have a set of clients that in 2016, we developed a relationship. So this is a real client.
This is a real client.
Okay.
We developed a relationship with a set of clients. There's actually 4 guys, right? One of the 4 guys, all of the 4 guys I did business with separately in different ways, all 4 of them. But one of the 4, he's a physician in Fort Worth, does a great work, renowned throughout the country, expanding his business. He's in nephrology, right? So this nephrologist has a best friend who's an OBGYN. His best friend who's an OBGYN is investing in birthing centers. You say, what's a birthing center? Ask me, what's a birthing center?
Yeah, I was going to say, Obi, what is a birthing center?
All right, so you just had a baby, right?
Absolutely. A month and a week old, Elena.
Elena's a month and a week old.
Shout out my baby.
Did you and Sylvia have a midwife or a doctor, OBGYN?
OBG.
Okay, so you had OBGYN. So that's the traditional approach. That's the safer approach. That person, they went to med school.
Yeah.
They kind of know what they're doing if there's complications.
But we did see some midwives in between. It did make me consider the more natural birth. So
there's a movement for natural births in general, but also there's some communities like the Mennonite community that you'll find in the Midwest. You might know them as Quakers.
Oh yeah.
They almost exclusively do the midwife process, and they pay for the services in cash, right? Wow. So a midwife is a more traditional. You can do the birth at the home. It's a more traditional process. But in the case, it's not really a great process if there's complications with the birth. So as you know, we live in a society that for good reason has regulations. And if one is utilizing a midwife that cannot do it if there's any complications associated with the pregnancy, and to properly protect yourself, they may have an OBGYN that they're connected to that they consult with. So in the case of complications, go see Dr. X.
Yes.
And so an OBGYN could say, there's a business opportunity. I am an OBGYN. I can run birthing centers, great margins. I could be the person, the signing off physician. I don't have to be involved in the day-to-day operations for the non-complicated. So a business opportunity arose.
So it's their way to step back.
So my client, the nephrologist, and his friend, the OBGYN, is like, we can still run our practices, but we can also start this business, which they have. So when they presented to me, their problem was this. They needed to do a birthing center in the Midwest. Let's call it a city up north in Illinois, where 6 championships were won. I'm not going to name the city, but let's just say there's a place like that. And in that place, they wanted to buy a building for the sake of their birth center. So they told me their story, but there's so many things to unravel.
That's step number 1. Client called to tell me their story.
They tell me their story.
So that's step number 1. And then step 2 is listen to gain understanding and interpret whether an opportunity actually exists.
Okay, so as they tell me their story, I hear
you're sifting through
$2.2 million to get this done, $1.2 million to buy the building, $1 million to fix it up for their needs.
Yeah,
$2.2 million, and I think it's owner occupied, meaning the operations, the way they're going to cash flow is from the business itself. They're going to occupy 100% of the building. That is a lower risk compared to an investment for a bank, meaning a bank will allow you to put a little bit less down. So I thought instead of putting down 30% on an investment property, they can do this at 20%. So I'm thinking that. But I was like, does an opportunity exist? Because...
And you're saying does an opportunity exist for them as a business or for you? Like, is it even worth your time?
Is it worth my time? Will my bank have an appetite for it? My bank is at the time, was a bank out of Louisiana, but our operations were in Dallas. Mm-hmm. It's a problem for the bank to have a city where 6 championships were won, not Dallas.
Yeah.
Where the actual operations are going to be, because the person running the operations is not, I can't reach out and touch him. I can't go to his house and say, hey, we're having these problems, how we're going to fix them.
So if they need their money or if any trip ups happen, they want to be able to reach out and touch you.
They want to reach out and touch you. So this is how I mitigated the problem. I said, it is true. The person running the operations is in this city where there's a lot of wind and it's cold. However,
Michael Jordan and Oprah,
his business partner and best friend is right here in South Lake, Texas.
Okay.
And I've known him since 2016. It was 2020 at the time. I said, furthermore, I've known him and lent him money and seen him perform well on the loans. And furthermore, the first transaction I did with him involved a urgent care facility that didn't always perform. And those guys were so dedicated to making sure it worked that they would have capital calls to keep operations going. So I was like, see, these guys, they know how to navigate through tough times, and they're willing to.
That's what I was about to say. So you've seen the highs and the lows and how they navigated both. Seen his character, the perseverance, integrity.
Yeah, so these are all things that are very important to the bank. So the bank is getting more comfortable, like, what are you doing bringing me this deal in the Windy City? And I was like, yeah, it's in the Windy City, but look at all these things. However, two of the 4 guys live right here in South Lake. And the other 2, they all know each other for 20 plus years. And by the way, the guy who brought it to us, I've known and been his banker for 5 years. So then they were like, okay.
So part of the client calling, telling you the story, and then you interpreting whether or not that's an opportunity for you is the core, the experience, the relationship piece in that, and being able, can I sell that to the bank?
Sell that to the bank? And so we knocked off
credibility.
There's credibility. We knocked off, does an opportunity exist? So after the client told me the story, I told them that's when, if you have enough experience, you can tell the client, no good, no go, let's stop here. Or there's opportunity, but here's some problems we're going to have to challenge, or things we're going to have to navigate. So I told him, I said, hey, there's going to be challenges, but we have a lot of good things going for you guys.
So that's step 3. That leads into
step 3, organizing and structuring, communicate to the team. So in that, the way this team wanted communication, we call them a one-pager. It's like a mini underwrite. Mm-hmm. So I want you to tell me, what's the ask? Mm-hmm. How do you know them? What's the relationship?
Yeah. How do you know? How well do you know them?
How are you going to structure the deal? So let's talk about structuring the deal. These guys are going to buy a building. It's not ready for them to use. They have to fix it up to use.
That would be a red flag for me.
Yeah, but something that can be navigated. But there's transactional risk associated with the construction. Do they have the right GC? There's ways to mitigate it. But they're going to buy the building. They're going to fix the building. The real estate is separate from the operations. The operations pre-revenue. The old operations have revenue to support proof of concept. So
the real estate being separate from the revenue, is that a good thing? It sounds like it should be a good thing.
It's not necessarily a good thing or a bad thing. It's just a thing. So you're like, okay, you got to ask yourself how, anytime a bank loan, here's the deal. Sometimes the customer doesn't really know how they're going to repay you, which is kind of crazy. The loans only work if you know how you're going to repay me. The loan only works if you know how you're going to repay me. So if you can't identify, the customer should be able to, the banker has to be able to identify how he's going to repay. So ultimately in this transaction, we're going to get repaid by what we call cash flow from operations, by somebody booking clients to be, David's going to have his next baby come through this birthing center.
Yeah.
Connect with the midwife. Well, we know because of construction, our primary source of repayment ain't even happening this year. It's happening next year. So we got to have some strength if that's so. Well, how are we going to mitigate against that? I'm glad you asked. So here's how we structure the deal. Typically, people will create a real estate holding company. That real estate holding company will charge the business operations rent. The birth center will pay rent to the real estate holding company.
Nice.
Then, so the primary source of repayment is cash flow from operations, technically rent, but really we know it's cash flow from operations. Secondary source of repayment, if you don't pay me, I'm taking that building back from you and I'm selling it on the market for pennies on the dollar, unfortunately. I'll be happy to get 65 cents on the dollar.
But that may not be quick enough if they need
that might not be quick enough because I got to get attorneys involved and everything. So then the third or tertiary support of repayment is the sponsors themselves. Sometimes, in fact, the bank that I left, the bank that I got all my training at, they would say first is cash flow from operations, second is liquidation of collateral, third is the sponsor. The bank that I just left, they put the sponsors first. They're like, we need that sponsor to pay us back if this thing don't work. We ain't got time to liquidate. Like, we do need to foreclose, liquidate.
But nobody trying to go through all that.
You're going to have to pay us first. So this is where sponsor matters.
Okay, so sponsorship for me is different when social media and marketing world.
Oh, yeah.
Or events. Different type of sponsor. I'm guessing sponsor with this.
Tell me what you think when you hear sponsor.
Somebody who's going to almost foot the bill, put up enough capital up front so that, like, you sponsor an event, you can cover the cost of the event.
Yeah.
So in this, I would think a sponsor would be one that, if I need to go to you, you can have my back in case me and my business partners don't have enough capital.
Yeah. So the way a bank thinks about a sponsor is twofold. The person who's going to make this thing work, get that cash flow from operations to actually work, and the person who's the backup if stuff doesn't go well.
Okay.
Who got some capital.
So we got pretty close.
Yeah. So we had 4 sponsors in this case. The great thing is all 4 of them practice medicine in different fields. They were not, the strength of this transaction is they weren't relying on making money from the birth center to feed their family.
Yeah.
They had OBGYN practice, nephrology practice.
This wasn't their bread and butter.
They had one was a sleep study doctor, and then I forget what the other job. But so they all had ways to make money.
So, but the investors, because they're investors in deals.
They also had investors. So they were investors in the real estate. They were the owners of the real estate, but they also were investors in the birth center itself. And they had additional investors who just brought cap, just like we have additional investors in scooters,
right?
who are like relying on us to make the scooters happen for them to get a return on their investment. So they had all that. So we like the fact that they weren't relying on this to feed their family. We like the fact that they had a lot of skin in the game.
Right.
Over $1 million in liquidity, that they were going to keep the operations running. So they had the capital to keep operations pre-revenue. So that felt good to us.
And that looks good to the bank.
That looks good to the bank. So now it's time for the banker to be wise and structure the loan. So I'm going to give these guys a loan, but I'm not going to make them start repaying back principal and interest when the building's not even ready to go. So we gave them a year of interest-only payments. So you got to pay something. You got to cover the interest cost, but we're not going to make you pay the whole payment while you're in construction.
But how do you set that up in your position? Isn't there something like the bank would?
Well, I'm the banker. I'm the one who's supposed to structure the deal. So this is why commercial bank is also a team sport. You usually have your relationship manager, you have a market president, somebody like a director, kind of guiding the things, but you need to have enough know-how to put your deals together. So, and then we can review and give you guys ideas, but we can't be there walking you step by step through every phase.
Right.
So we shared that, hey, look, we're going to give you a year's time to have the general contractor actually build this thing out. Mm-hmm. And then you pay principal and interest. So we structured the deal. We also gave them some other tools. We gave them some working capital tools. We reviewed how they performed at the other birth centers to get an idea how they will likely perform. And they gave us projections as well, how they'll likely perform at this birth center, the time they're going to need to ramp up to get it ready.
And how much, like if you could score how important that is, their previous performance with the first.
Oh, that's critical. Like past performance is the best indicator of how you're going to do something in the future. So if they didn't have a proof of concept, that would have been even more of a challenge.
Yeah.
But they had a proof of concept. So now that we had a structure in place, we knew how to give them a loan. We also gave them a loan. So the construction loan and the loan to buy the building are separate loans. Because there's a separate timeline.
Building, remodeling.
So we give them, on the loan to buy the building, we give them like, hey, 20-year amortization, maybe sometimes a 25-year amortization, 7-year loan. And in that 7-year, year 1, interest-only payments, year 2 through 7, principal and interest. The loan to do the construction is only 7 years total.
Wow.
We need that paid off relatively quickly.
And why?
Useful life. The loan should align with the useful life. If you go buy your Range Rover, I'm not giving you a 30-year loan for your Range Rover. Right. In 30 years, you are not going to be driving that Range Rover.
Correct.
So
it's not the plan at all.
The capital improvements associated with the building should become effective or accretive, meaning you should be able to make more money on the building now that it's no longer a restaurant with a pub. Uh-huh. It's now a birthing center where they have rooms for their patients.
Yeah.
Now that's a comfortable facility. You should be turning over money to pay down that maintenance cost that you incurred, right?
Okay.
So, and then they have the opportunity.
So it encourages you to move quicker.
So typically when you have an improvement loan like that, it's anywhere from 5 to 10 year max. In this case, we did it for 7 years.
Gotcha.
So basically on $1 million and we gave them 80% of it, they had to pay down that $800,000 in 7 years. And what we did was we allowed them to have interest only, and that year really didn't count against them. And then we did 7 years of payments. Pay off the $800,000 in 7 years. The building, we have a 7-year loan, but you have 20 years to pay it off. Meaning when that loan is due, the balloon is due, you're still going to owe money. But the building's still going to be there. Useful life on the building, 50 years plus and plus and plus. So you're gonna have to refinance or pay it off quicker in that time. So you're already shaking your head. Why are you shaking your head?
Man, because
it's a lot to think about.
Yeah, and even you dropping the balloon in there, like a lot of these terms are like literally vocabulary that you need a whole nother course and masterclass just to understand. So I can't imagine people trying to get into this and do a deal like this without understanding, without proper consultation. Like, why would you? Because I'm asking you, but I'm really thinking about the people I know who've tried to seek this without an expert like yourself.
So
through, because just you explaining, I'm like, okay, that's a whole nother process. And I'm seeing, as you're verbally describing, I'm seeing you structuring the deal. And I'm like, man, that's a lot of paperwork right there to even set that agreement, set that interest. And then how do you even know to do this without a experience proper consultation?
So it used to be, we're in a microwave society. We should stop using that term, because microwaves were a thing of the 80s and the 90s. We're in a light year society. Like, I can go to, what just happened with Denzel and what just happened? I can just go Google it, find out what happened.
Right here, right now.
News channel. And so people have that same expectation in every aspect of their life. But to do this commercial banking, it's years. It's 10,000 plus hours. So there used to be a time.
There's no shortcut to it to truly understand.
Exactly. The guys who are CEOs, the Jamie Dimons of the world, when they came out of school, they would spend years as an apprentice. So they would go with a senior commercial banker, right?
What years we talking?
5 years. 5 years.
5 years.
5 years where they were just the junior, the number two, learning how to do a call. Like, think about it. Before we even get to step one.
Yeah, because that's what I'm thinking.
I had to already have proven myself to the doctor here.
Yeah.
In order to prove myself to the doctor here, I had to know how to communicate with him in a meeting.
Yeah.
And then get him comfortable enough to see, okay, he's confident. He seems like he knows what he's talking about. I'll give him a shot. If I'm not confident in that meeting, I don't even get the next step.
Right.
So there was 5 years going through in-client meetings, dinners, functions, and then going through deals, learning how to be an underwriter, learning how to spread financials, all that. Mine was a little different because I spent the first 7 years of my banking career as a retail manager.
Okay, retail.
So I was a customer service, branch manager, district manager on the retail side, right? And then I did, it was like a small business manager, deals below $1 million. So that was my apprenticeship for the commercial side. So by the time it came to the commercial side, I knew how to call and have that meeting.
Yeah.
But I didn't know how to structure these deals to this extent, right?
And the numbers were just a little different.
So the way we put things together was, I can build off the experience I already had. I can build off the experience of my teammates and get more looks at deals. And then you have a market president who has more experience than all of you guys, and you work as a team to understand the deal. But if you just come out after 2 weeks of training and you're trying to do this, I'm telling you, there's going to be some stuff you miss.
It's possible.
It's possible. But
you would already have to have some experience, some previous experience.
The reason I can
know where to start.
The reason I can say to my customers today and say, I'm going to get you this deal done, pay me $5,000. And they're like, I know what I'm worth. So for me to stop and spend the time to figure out how to put you in the right product, you got to pay for it up front. And I would say, look, we're going to get you the loans that you need. If we don't, we're going to refund some of that money. But I'm confident that I know what it takes to get you there. But there's a lot of things to know what it takes. And there's 14 years of experience to get to this point. So we haven't even got to step 3 is where we start telling the other members of the bank that we have something we want to do. Then in step 4, gain team's consensus to present an offer. Yeah, they have to agree that I've properly mitigated the risk on this deal for us to even go forward.
Because I was about to ask, when you gain team consensus to present the offer, who's on your team like that? Because I keep hearing you say we, and I know you structure
it would
teams
be like,
around.
So you've got a sales team and the underwriting team. Okay. The sales team would consist of the relationship manager, market president, executive vice president, just people that are geared towards bringing money in the bank. Then you have the underwriting team.
You're talking about as a banker, your team at the bank.
Yeah. This full disclosure, we're talking about bank deals. However, all deals tend to be bank deals because even if you're not doing this, somebody else is doing this. somebody else's process says, I'll give you a perfect example. Space and Equity is a brand new company. We were thinking about, I was like, I don't really want to sell my rental property because I know I'm going to go through that cash in probably 4 months, right?
Yeah.
To keep operating. So I was like, let me see if I can get a line of credit. I got a bank line of credit.
Based off the rental property.
Some of it based off rental properties, also some of it based on our experience. So they gave me an unsecured line of credit, right? Mm-hmm. We need more cash to get the Come Correct Consulting off the ground and keep everything going. So I considered doing the bank statement loan, also known as a factoring loan.
See, you dropping stuff.
And I wasn't trying to drop 37%.
We need to put definitions up on the screen.
I wasn't trying to drop the 37%. But because of my banking acumen, I realized these guys are going to give me $70,000, and let's just roll it up to 40%. So for $70,000, they're going to want 98 back. 5 months.
Okay, 5 months. Go.
Give me $70,000, 98 back. 5 months. So let's hit a pause. You got to understand your damn receivables. If I'm only right now, Space and Equity, we typically have about 7 receivables a month. You got the loan consultant client here. You got an investor here. About 7 receivables a month. These factoring loans want payback daily, weekly, and if you have experience, monthly. So they were going to give me 5 months to pay them $98,000 for $70,000, $28,000 in interest. If I was desperate and I didn't have other resources, I would just have to take it and then figure out how to pay. And guess what happens? Then you get another loan to take over the other loan. So that it just snowballs.
In the cycle.
So I called the dude. I was like, let me get this straight. Because at first I thought he was saying that I was paying 37%. So I was like, so on an annual basis, this is like 231. He's like, where'd you get that number? We sat down. We figured that they just in 5 months you pay the whole thing off, $98,000, 37%. I was like, that is not worth it.
Even that conversation, though, you had to have been speaking his language in a way that he knew you knew.
He knew he couldn't swindle me, so he was like,
what he's used to doing.
I was like, so here's the deal. My receivables don't move fast enough to take that loan. I'm going to have to then pull cash from something else just to get that $70,000. Then I'm going to burn through that. My burn rate through that cash is about 4 months. I can't do it. But if I didn't have this is why you can't do the commercial loans by yourself. Because I was my own advisor, like as Lil Wayne would say. I was my own consultant because I had expertise in the space. However, another entrepreneur, new entrepreneur, better consult somebody that knows what they're talking about and say, don't take that cash. If I was a restaurant, I might have been able to take that cash because their receivables are like, they're getting their money like that. It's expensive as hell, but if you need the money, you need the money. But as a consultant, what we do at Come Correct, there's no way I could wisely take that money. It is going to stink that I have to sell a property to bridge, but we're saying between the scooters, between the consulting, we're going to make that back and then some. So it's kind of work. And that was the better risk to take.
Even with scooters, you're owning that real estate.
You're going to own the real estate there too. So that's going to gain us back. But
so that's part of gain team consensus to present offer. Yeah,
because you
present offer to the client.
David, you're excited about the deal. You're thinking, oh man, that $2 million, that $2.2 million.
Yeah, 2.2.
Hey, that's 10% of my goal for the year. Awesome, I can move up. Boom. So that excitement is going to cloud your judgment in some of the things that you need to consider. That's why you have a sales team and you have an underwriting team, offense and defense. So you gain consensus with the offense is like, yeah, let's go for it. The defense is like, what did you think about this? Defense is always thinking what we shouldn't do, and especially the bank. The underwriters are like, oh my gosh, you guys are just Debbie Downers all the time. But sometimes you need Debbie Downer to have you consider some stuff that you wouldn't have thought about.
Yeah.
Because you're trying to get the sales done. All right. So we got team consensus. So like, man, these 4 doctors got 4 different ways they make money outside the birth center. They got proof of concept. They got capital. They hit, boom, boom.
They
hit all the check boxes. They mitigated the risk properly. Team says, let's go forward.
So then we got to present this off to clients.
Now we got to get the client to agree to the terms. We haven't even hit go yet. Okay, so client's like, I got this problem. I'm like, I got the solution. My team is like,
Okay. If we do it like this, this, and this, check on
The team was like, okay, let's go for it. Now the team's like, since we're taking that out of town risk, we're gonna do this and this. So now we present the offer.
They add some terms into.
Yes, conservative terms. Here's the rate. And they're like, we gotta get a point. We gotta do this. We gotta do this. And so I'm like, hey, I got a relationship. We're gonna get repeat business from these guys. They're savvy. They can probably get another bank to do this.
Something else I'm hearing in here is you're having to balance both sides, because you gotta get the team to accept the terms or the client wants to.
The client has to accept the terms, just like I declined those terms.
Right. Both sides have to accept the terms.
So think about it. Somebody on that factoring loan. They put in work to come up with terms for me.
Yeah.
And then I was like, no, that don't work. So they're like, my time is wasted.
Yeah, exactly. Because now I don't have a deal.
So that relationship manager has to bridge that, has to make sure that everybody wins, if you will. So
and how difficult that must be as a client to try and manage your own relationship to get.
Especially if you don't know what you don't know. Clients can be sophisticated as much as possible.
In their lane.
In their lane. But they're never going to know more than the banker knows. In his lane.
Facts.
And if they do, that is a banker that doesn't know what he's doing. If your client knows more than you, he's just not experienced enough.
That part.
Unless, like, let's say, like, for instance, I'm a bank client too. So my banker is very experienced, but he's younger than me. So I probably have done more deals, but his manager is not younger than me.
Yeah. And
he has experienced just as more deals than I've experienced.
And he's looking out for you.
And so he's going to be always in, but that's why it's a team sport when it comes to banking. So relationship sport and a team sport.
Do step 5 and 6 kind of coincide, go hand in hand?
Yeah, to a sense.
Presenting the offer to the client, then you're negotiating initial terms. Mm-hmm. But when you present the offer to the client, that will kind of be where that negotiation has to happen, right? Because you're saying, all right, this is what the team said.
Yeah. Sometimes you have to tell the client, you got to know.
Look here.
So in this game, there's a lot of chess play. You got to know I got to know what the market is, where can he go somewhere else and get this thing he thinks he can get? Yes. So then I got to be a little bit more aggressive in my offer.
Yeah.
In his favor. Are we the only stop he can go to? If we are, do we want a client that he can only come to us? Probably not. But if for whatever reason we'll go forward, now we can just put our foot down like, yeah, that's the fee. Take it or leave.
It is, yeah.
Because they know, like, so I'm a startup. The factoring company is like, you ain't gonna know, nobody's gonna give you less than 25%. I'm like, yeah, but I got other resources, so I'm gonna use those. But they can charge that because they know you got no other option. Man, we are only, so we got a 5:00 Zoom. We're gonna have to keep this thing going, but we ain't gonna finish it right now because we just got to present the offer to the client, and then we figure out how to present, who's got the upper hand, and still make it a win-win. Then we negotiate those initial terms.
That's step 6. And step 7, confirm or approve the terms with leadership.
Yeah, leadership. So we had to go back. Hey, leadership, we had to lose here in this space. We get some here. So we get the approved terms, and now we have the term sheet and pre-approval. We haven't done any underwriting yet.
Oh, dang, this is all before. And so when you're negotiating initial terms, you're talking to the client and the team.
Yes.
Negotiating both sides. But then you're still not even yet to the leadership at the bank.
Yeah, so you have...
Who has to say yeah or nay.
Yeah, exactly. So you have some deals where, here's the deal. The bank wants to be involved in every deal. Mm-hmm. So you might have that same example I gave. My banker's team has a $3 million pen, meaning they trust them enough to do $3 million pen is like the pen is more powerful than the sword. Oh, yeah. They can sign off on $3 million worth of loans.
So that means they have the ability to sign off on $3 million.
But they better stay within the lines. So just because I give you that pen, it also says, subject to non-high risk deals, subject to XYZ. So they kind of put it in enough of a box so that they can't get too wild with it.
Gotcha.
Right. So after that, though, then it has to go up to the senior leadership.
Right.
The senior leadership, they ain't looking at the deal till it's ready, Chris, ready to go. And you better present to something that you know they have an appetite for, so you're not wasting their time.
Yep, or it's not going to give you time in the future.
So in this case...
And that's where the term sheet, because on the step 8, official term sheet pre-approval, is that when the term sheet's drawn up because they...
Yeah, so what you don't want to do... Some people don't even like to do term sheets at all because there's so much moving parts. And some people, by the time they get to a term sheet, they know that they're going to be able to approve the terms on that sheet.
Gotcha.
You don't want to read.
So literally, term sheet is sheet of the terms. And you don't want it. Should
you don't want retrade.
Yeah, and both
you told
sides
me this.
should be good.
This is that. I'll give you a perfect example. I had a client who thought there was retrade because we got a term sheet in April, and then we retrade is you said we could do it this way, and you changed, and we're doing it that way.
So like we call reneging now here.
Yes, renegotiating terms. Nobody likes that. So some people don't even put out term sheets. You know the way you can not put out term sheets? Relationship. If I don't have a relationship with you, you ain't gonna trust. You better put that on paper or something. But if I have a relationship, which commercial banking is, you say, hey, bro, you know you've seen me before. You've seen me work. We're gonna get that done for you. But I ain't put it on paper because some things might change. But I guarantee we're gonna get something put together for you.
That's powerful.
And then you can look at it from there.
That takes relationship equity to a whole new meaning, whole new level.
This is why we have to understand how the game is played. I'm going to be more comfortable if we have some sort of bond, some connection.
Yeah.
Jay, military.
Yeah.
Air Force. If his banker had...
No, that's me. That's me.
If his banker was a Marine...
You can't trust him.
Because of that connection, they got relationship.
Yeah, absolutely.
Right. Black people, we need to stop worrying about the melanin in our skin creates some of the relationship. We don't have all the same experiences just because we both have a lot of melanin in our skin. Yeah, but there is some relationship there. So we have to understand that in order to do this, you have to have relationship. And the reason why sometimes it doesn't necessarily work is that there's not enough of a vibe, of a connection. There's a lot of work to this. Who wants to do all this work with somebody they don't get along with?
Got that right. That's facts. That part.
So
damn. And this is just this is us talking through.
This is talking through.
Trying to explain. It's a lot of work just to talk about the.
Once you've done this, I've done 100 million plus of these deals.
Right.
So in my head, I can see all these steps and know where I'm not nervous about any of these steps because I've experienced them all.
Right. So you got all these different examples as you're thinking.
But if you don't have examples like the client, they're going to have some anxiety.
Screwed. Of course.
Even if they got money and they're like, that's a lot, man. That's a lot to... Like, I know I got a client. Let's just say that client played a professional sport. And let's just say he's now doing something new. I know that I have confidence when I have this conversation with the banker, they're going to get to that end goal. He doesn't have that same confidence because he hasn't experienced that. But I know that. But since I've experienced, I'm like, we're good.
No, we made it to
the place. So he needs me to give him the comfort
and the reassurance
in a space that he hasn't been. Just like I would need somebody in a space that I haven't been to give me comfort and reassurance. The Scooters people on the development side, I've never developed a Scooters coffee store. So when Abby puts out all these fires and is taking care of stuff, I feel confident because I know that she's gone through this before.
Yeah. It's like, okay, this is normal. Okay, cool.
So here's what I'll say. We got to come back to this.
Yeah, because
this is a lot.
Step 8 of 15.
Step 8 of 15. So you guys are getting the Patreon version of Come Correct. We're going to drop this on our normal YouTube page in snippets, but there's a lot of gems that we're going to continue to work. So
we're at the official term sheet and pre-approval though. That's
you got to rep SMMXEPERTS. How can they find SMMXEPERTS?
Oh man, SMMXEPERTS. You come hit up King David Reeves on all social media platforms, especially Instagram. And you'll see the SMMXEPERTS options. DM me. But SMMXEPERTS, we're actually starting the page officially on Instagram and Facebook. So that's SMM, like social media marketing, experts, SMMXEPERTS. And of course, Mentor Connector, our professional mentoring company as well. You see that out there. You can find that on Instagram and Facebook. But yeah, you just hit up King David Reeves, man. You'll be able to get to everything else we're doing and touching. And we're here to serve, man. Love working with Obi and the whole Space and Equity team. Firebrand Media, check them out as well. Doing the dang thing, man. But again, we don't work with everyone. And that's everybody I just named. Firebrand, Space and Equity, Come Correct Consulting. We're not working with everybody, but we do work with those we love doing work with. Yeah. Building relationships with. That's what it's about.
That's what it's about.
There's a lot of equity in these partnerships, relationships, and we are elevating together. So if you're not about iron sharpens iron, you're not about going to the next level with the people who are closest to you, literally creating great content in Obi's home. If you're not on that level where we can trust, know, like, and trust you to do business with you, we don't want it. We don't want it. And we're going to make a lot of money together, but it's not for us. It's really just a tool to help make a lot of impact and elevate our families for our generations to come. That's what this is all about. It's legacy. We're supposed to leave inheritance to our children's children's children.
There you go.
And then some. Will your children know you when you're no longer here on earth and physically? Because I guarantee you Sam Walton will, Jeff Bezos will, Warren Buffett, Mark Cuban, Obi Chukwumah will.
Amen.
That's what it's about. Come correct.
And they can't stop it. Space and Equity, we're about increasing assets and creating new space. Obi_Empowers on IG. Space and Equity Corp, the website. Come check it out. YouTube, Come Correct Podcast, Space and Equity, Come Correct, and they can't stop you.